Hi everyone, it's always nice to meet you in a new episode of our gold price weekly forecast. Gold today, we are going to start with the numbers. On the last trading session of Friday, gold spot printed a closing price little above $1,834 per ounce. Numbers rounded and the market is closed. And on the last week, gold traded as low as $1,805 per ounce and as high as $1,847 per ounce. Gold is trading in an upswing. It's trading above its old daily symbol moving averages, which is technically bullish. And for the RSI readings, it's moderate in all the charts on the daily, on the weekly, and on the monthly chart. For the supports and resistance, the first support for gold is at about 1828, then 1813, then 1806, and the resistance levels 1845, 1860, and 1875. The pivot on the weekly chart is located at 1828, and for the daily chart for the last trading session of Friday, it's located at 1835. That's all for the numbers. We'll move on now to the economic calendar. On the economic calendar for the coming week, the market is waiting for the following economic data from the United States: the manufacturing PMI, services PMI on Monday, CP consumer confidence on Tuesday, and Fed interest rate decision, FOMC statement, and FOMC press conference on Wednesday. That's all. We'll move on now to the trading strategy. Hi again. In this part of the video, we are going to have a quick recap of our last video, and we are going to look at the US dollar chart and the gold chart with some analysis of the, let's say, technical side of the trade, and we will arrive at a conclusion. Starting with a quick recap on our last video, actually, we have expected that gold could do some sort of a breakout. But I said that my advice was actually to sell any peak of this rally. Actually, I sold myself at 1843 on the last week. Moving on to the US dollar chart. Now, as I have explained so many times about the US dollar, the US dollar is in an uptrend. It's trading after a breakout from an inverse head and shoulder, which will appear more clearly on the daily chart. The US dollar has been trading on an uptrend, and any dip I expect it to be, the market is going to buy any dip on the US dollar, I believe, until the US dollar hits minimum of 98 up to 102 in terms of the DXY. These are the targets based on the inverse head and shoulder, which took like almost half a year or even more than that, okay, to build on the charts. Moving on to the gold chart. For me, I wasn't actually surprised of the price action of gold in the last week, because gold is a safe haven and other markets are witnessing volatility. So gold, as per the book, has to be somehow stable in comparison to other markets. But however, this stability, I don't believe it's gonna last for long, because you cannot light. What's the meaning of lighting a candle in a very dark room? Okay, everything is selling off, and gold is stuck in a falling elevator. All the markets are selling off heavily, cryptos, indices, and also the gold mining stocks and silver mining stocks also are going to see some sell-off if the S&P average is going to continue this correction another, like, let's say 3 to 5%. However, now until this moment, you have to look at the stock market. What is happening there? If the stock market is going to sell off more, which I do expect that we are going to see more sell-off, this means gold cannot go up, logically cannot go up that much, maybe 1850, that max to max. However, look at 1828. If 1828 is broken to the downside, gold market will break with a momentum to the downside. Momentum, I say, like $50 to $100 to the downside. If we hold above 1828, we might see 1850, 1860, 1870. My advice for you, maybe avoid gold market in the coming week, because it's going to be so much volatile. Or otherwise, as I said, look at 1828 and use a very tight stop loss. Don't trade this market in the coming week without a stop loss. Thank you guys for watching. I'll see you in the coming week in another video.